come you need the time to go by quick? Good morning. Can I get an audio check? Yes, no. Tap, tap. Hello. Somebody. 1, 2. Very soft. Is this better? Let's see if we can increase it. How about now? Sounds better. Okay. We'll work on that. New mic. I'll get it right. Video quality is horrible. That might be on your end. I don't have any restrictions on this side. Yeah, you might want to check your settings. You can change your YouTube settings. You can tell them what quality you want. Sometimes it downgrades you automatically, depends on your speed that you're on. Sounds good. Okay. All right, so we're going to get started. This session is to just run through, first of all, the indices. I'll start and close with the indices. Thanks for the feedback. I appreciate it. And thank you for being here. I know it's early. Nobody wants to wake up early, but we are here. So the indices are short-term, lower lows, lower highs. And this is where it gets ugly in the news, and this is where the feelings get ugly. We feel bad about it. But to avoid frustration, stop buying rallies. Sunday night, I sent out a video to the members. And the point was, don't expect upside to hold unless we rally 2.2%. So I say it again today. Unless the rally goes 2 or 2.5%, 2.2%, don't expect it to last. So use small rallies, 1.5% to get out or to book profits. So if you buy calls and you make money, get out. To give you a rough idea, I sent in the morning note, I sent levels on the ES and the SPX. So basically you need to clear, from memory, 4,500-ish on the SPX and 4,520-ish. So if we take this out up here on the ES, we might be in better shape. But these little rinky-dink rallies, I've been putting the path, like these yellow things, I've been moving them to show a visual as to what could happen. Like today, if we rally from here to here, which is about 0.7, even if it's 1%, I would expect it to fade. What is the graph behind the price action? What, this yellow thing? That's my forecast. It's a visual representation of what could happen. So I just copied price action from prior days and I move it forward. Very simple visual way to show people what I mean by fade rallies. Yeah, we might make 1% or 0.8 and we're going to give up more and make a lower low. That's how we slide. Look, lower lows and lower highs. It's not rocket science. So people start expecting a lot more than this, and that's where the disappointment comes. They think, where is it? It's going to come. This time it's different. This time it's different. And it's not. And they get disappointed. and it's painful. It bleeds you. So what do? I start selling puts and put spreads in things I like. Good stocks that are falling. Like this morning, CVS is falling. I'm not saying go long CVS. We need to investigate what the hell's going on. But if it's falling into support, Splunk is falling into an area of support. So they tell me it's something to do with their pharmacy. So there might be something to it because somebody cut them off and Amazon won. So there's slight uptick in Amazon. And it would be serious if CVS loses the 66 area, because then it might accelerate lower. So I guess we'll start with CVS. I'm going to keep a log of all of these. No, I'll do it later. So CVS is interesting from a trading perspective. First of all, if I'm long, I wouldn't add. And if I'm looking to get long, I should be careful going all in, because if they lose this prior support, which was under duress, I remember that, then they're in the 50s pretty quickly. So be careful. It's interesting, but not all in. Leave room to add. So this one would be, if I wanted to own shares, I would sell puts to own the shares. I wouldn't expect calls would be a good idea. I wouldn't add shares. I could protect if I own shares by buying some puts. So it's a little tricky, but it's interesting. Also, Splunk beeped at me this morning. It's falling into an interesting short-term, mid-term area. So if you can see here, this was a battle zone back in April. They broke out somewhere in May, and here they are back into the breakout. It's not an absolute bottom. If you go to a daily chart, you can see that there could be more downside from a harmonic. But I do like the level, like from here to 92 is interesting. So that would be one I would sell some put spreads down in the 80s to see if I can just create income without much headache. But the problem is 6 days on the clock. So I'm going to take it out of my list. I don't want to trade it into the earnings. It's just too much guesswork. All right. Again, thank you for being here this morning. I want engagement, so give me your tickers. We started with the S&P and then we jumped into CVS. The comments are pretty similar on the NASDAQ. The only difference is the small caps. My notes yesterday was that small caps may be the ones to bottom first. So pay attention to what they do, okay? A rally, I need them to be above 189.5-ish. Above that yellow thing would be awesome, but that's too much to ask right now. So the small caps might bottom first. Keep your eye on this one. Meanwhile, I wouldn't trust rallies until we clear 4,500 to round things out. All right, so somebody's asking for NEO. On NEO, what's your time frame? Short term, long term? All right, from a trading perspective, wow, it's popping 5% today. Earnings in 12 days. So whatever I tell you now, take it with a grain of salt because the earnings are coming up soon. That's a lot of guesswork. So technically, it could get to 13 or 13.50, but I wouldn't trust it. Long term, yeah, I don't trust that either. I mean, I don't know anything about the future prospects of Chinese EVs. They do have a huge market. They do produce a lot of cars. They're not profitable. So track the progress of the sales. So this is their quarterly sales. They had a dip. So let's see what their next quarterly sales are. Tradable, definitely tradable. Investable, do your homework. I'm not qualified to tell you how good they are for the future, but I know they can produce a lot of cars. I know they have an interesting model. I don't know if they are staying with the rent the battery type of a model, not buy it, where you can swap your batteries quickly. That's interesting. Okay, so we got NEO out of the way. CCJ. Thank you. I can't remember what they do. Uranium. Again, a battery play. Is this what it is? Or is this? Anyway, big range. So I wouldn't get long into 35, and I wouldn't get short below 32.50. So it's tradable between 33 and 35. Ping pong between the two. I think if you take out 35.20, you have the opportunity to break through whatever happened in July late. Meanwhile, you have plenty of support below. Short-term comments. Doesn't look like they're going to lose 31.50, so if you're looking to create income from selling puts on something, that would be it. Good morning to you. Alcoa. Old school. Alcoa. That doesn't look good. What happened to Alcoa? Wow. What is going on here? Believe it or not, there's a study called the Wolf Wave. The target is right there. So I would think, my goodness, there's no immediate support, and the support is pretty old. It's from 2021. So 26 is interesting. Anything below 28 is interesting. To me, study the company. Why is Wall Street treating it like this? There's always a reason. So look into it. I wouldn't short it here. I wouldn't go all in. If I'm long, I would use rallies to get out of my problem. If I'm looking to get long, I would probably sell puts in the 27 area to own the shares and do a stock replacement strategy. What the hell is this? Sell puts, buy calls instead of buying shares. That would be my strategy with Alcoa. Oh, look at this. Check it out. I don't remember doing this. That's one of my drawings from back here. I said, what if it does this? It's at that level. In the past, when I go long a stock that does one of these, I've made money. So it's too late to short. It's too late to panic out. Good morning. It's too late to panic out. So it's interesting, but just like the S&P, I think rallies will fade a little bit. So you need to see them stop making new lows. New lows are killer. Absolute killer. Folks, again, thanks for being here, and let me know how we're doing. Give us feedback. Thumbs up if you like it, and subscribe to the channel and put the bell so you'll be notified next time we go live. And the comments are open even after the fact. So if you want to engage in a discussion about a stock after the fact and you don't know how to reach me otherwise, the comments are, keep it clean, but they're for you. Tickers, let's go. Yeah, 30 years ago. That's old in school. There you are. Shopify, PayPal, AMD, Datadog. Okay, I'll start with Datadog. I'm long, and I don't remember how it's doing. But the way I got long, oh, it's doing well. I remember. We got long on this dip as a group. And if you're not part of the group, hit me up. We can get you subscribed. So sold puts and put spreads. We didn't buy calls. I liked it where it fell. I wanted to leave room for mistakes, and it worked. So I was a conservative way of catching the falling knife, but at least we created income out of thin air. I would not buy calls. I would think going into 96 is a problem. Shorter term, you can probably see the triggers. So if they beat yesterday's high, they might end up at 95. Take it one step at a time. So the question is for you on Datadog, if you're short term, if you're tracking it short term, are they inside of an ascending channel? So you want to see them go higher, higher highs and higher lows. So track that. All right, AMD, you're going to have to be careful with AMD because in 9 days or 8 days, NVIDIA reports, and the world is expecting a lot out of NVIDIA. So whatever happens to NVIDIA will definitely happen to AMD. I would be excited about AMD in the 90s from a trading perspective. I'm not dissing the company. If they lose this week's low, which is 105-ish, they will be 99, 98. there is support around 100. It is a round number, but I think the NVIDIA threat is real. The reaction to the NVIDIA. I wouldn't short it, but I definitely would not add to my longs. And if I am long, I would protect it somehow. Sell covered calls to buy puts, maybe. Buy a put spread, rent insurance somehow, or simply not go all in. Okay, it's a good company. We just need to see how they react to short-term. My concern is short-term risk from a knee-jerk reaction. PayPal, I am long and suffering again via a credit put spread at 55. So Wall Street hates this ticker, and I should hate it too. But it's a good business. They have a new CEO. I'm not too concerned with who's leading the company. It's a global company. It's in fintech, and it's profitable, and there's no chronic badness in the P&Ls. So I don't know what the freak out is all about. Now, from a trading perspective, this was a nice bounce area. When you lose a nice bounce area, turns into a catalyst lower. So that's why I went to 55. I would be willing to own shares at 55. So I sold the put spread down here. If you don't know what that is, I basically say I don't think it's going to go to 55 or lower in the next few weeks. And I get paid for it. Now, if it gets under fire, I'm not going to defend it, and I'm going to tell them, give me my shares and deal with them. So there's no immediate upside. If you trust wolf waves, on the 1 hour, there's upside. So maybe PayPal could be at 62 by Friday. We'll see. That's PayPal. Shopify, same story as PayPal and Square. The company's doing well. Not as profitable as PayPal, but Wall Street for now hates it. So let's take out all my lines. I am long Shopify via credit put spread, but I don't think I'm red. I am concerned about this gap down here. It's not so much of a gap, but it is a gap in volume. So be careful. It could bleed lower. I would use rallies to fix things. So if I own calls or shares and I'm red and it rallies to 58, I would close, get out, fix. I wouldn't say, okay, it's in the clear. Use strength to fix your problems. I don't think I have a problem that needs fixing. I don't remember off the top of my head. I have to look it up. But it's also a credit put spread that I did. Wheat. Yikes. All right, falling into an area of support, but that extends into 590. So maybe if it falls a little bit more, I would be interested from a trading perspective, maybe another 1% on that one. OCUL, what is this? Okay, so this bunch of stocks, you're going to have to study the company. The charts are not always very good. Okay, look at this P&L. So clearly you have to follow their progress with whatever they're pursuing. I can tell you that technically if you clear this candle, let's put a number on it, 4.6. If you clear 4.6, you might end up at 5. All right, so if you're holding for that, that's great. But I can tell you also that there's a risk that it goes to 4.2 before it does that. So the plan would be buy the dip if it comes into 4.2. Would be better than buying here and hoping. But whatever you do, put a stop. Say, okay, I'm investing this much. And if I lose that much of that, I'm out. Set a number. Have an exit strategy. Don't just wing it. PDSB. Where are these ticker coming from? Woof. Another no income here. Biotech. Technically, you're in the clear. The bulls have control. You should be at 7. But I know nothing about the company, and clearly there's no income. So these are the type of stocks that will go up 50% and go down 50% or more in one day based on some headline that is out of the blue. So make sure to study that. If you don't know it, hire somebody that knows. There are people out there that make it there, that do nothing but track biotech stocks. So that'd be the way to handle that. New NU is middle of the range. It looks tired. I think 7.8, 7.9 is a lot of resistance. So here's the deal. They had support short term. They fell below it, and now they're trying to get back to it. I think they're in trouble until they get to 7.9 and see what happens. So I want to see them get there, drop, and hold 7.7. So come up, come back down to where you are now, and hold. Then you can breathe on that one. SoFi, I like the company, but we booked our profits in SoFi. I don't think it's exciting for me right now. There's too much headline in it. There's too much emotion in it. Look at this. That's crazy stuff. I don't think, the company is good. I was the proponent of it. Anytime it fell below 6 and 5, we were all over it. We rode this rally several times. I have not re-engaged. If you twist my arm, I'd sell puts to own shares, or own shares for a super long-term partial position. But I'm afraid of this. There's too much weakness in the stock, in the chart. It doesn't take much to have them drop it 20%. Earnings are not for a while, so maybe at 7 I would be interested. Maybe. PayPal already talked about. Tesla, remind me what they do again. Nick, you're so funny. Okay, so Tesla is an emotional stock. We trade it pretty well based on charts. You can see how every rally's been sold since they lost this guy. And this guy's target was about $40 lower. So we're approaching the target of this neckline. This is where you look for support. There's nothing recent. Why? Because the rally was insane. So insane rallies bring insane drops. No problem, Climber. Don't worry about it. You'll catch up. So think about it. From here to here, we're almost about half. From here to here, it's approaching a support zone. But with Tesla, you never know. It first needs the market to stop falling. Second, so overnight, last night, I said overnight it could get to 230, and it did. Unfortunately, it did it overnight. I thought it would be better if it does it during the day, but it did it overnight. I'm looking sideways. I wouldn't buy calls unless I'm actively trading point A to point B. Like if I know my way around charts and I know how to chart a 15-minute or a 30-minute trade, I would do it. But you can see how they consistently are selling rallies. So first signs of a bottom, stop making lows, right? You can still make lower highs and then break out of a prior fail. So 234 is important. Do I have lines? Okay, look at that. Big test. If it gets above 234, progress. If it gets about 240, progress. Until then, don't trust these rallies. They will probably come back and make a lower low. You have to be actively trading that, or pick a, what do you call that? A strategy. Like, are you midterm? Are you an investor? And if you are, just nibble. Don't go all in. This stock can move $100 in either direction. And you don't want to be all in when the stock moves $100 against you. That's pretty tough. Hey, Jose, I see you here. I see a lot of people. There are some people that are not members. If you're not a member, say hi and consider subscribing. We do pretty good work. We do if you like this, we do this all day. All day, every day. Yes, all day. Minus my picture. Voice and screen share all day. All right, what is this? Next arrow. Same as Tesla. Lower lows, lower highs. Don't expect progress until they go above 49 and 50. 49 is a problem, 50 is a problem. 48, 50 is a problem. That red line is a pretty high volume for the short period of time. And no earnings soon, so that's a good thing. Let me zoom out. Oh my gosh. All right, from a daily perspective, It's not at a target. This is the pandemic. All right, so this is the middle of the pandemic zone. Let's assume the pandemic never happened and erase everything on top of this and everything below that. It just went back to normal, which is pre-pandemic zone. The area is supportive, but it's so far back. It doesn't really matter a lot short term. So expect upside, but you should know it's a battle. So if you're an investor and you're nibbling, I get it. If you're adding, maybe not. If you want to get engaged, I think selling puts would work better than just buying shares or calls. If you want to be long, I would sell puts and buy calls out in time. So that's a different way of synthetically being long. You're long, but without having to pay for all the shares. What? That can't be a ticker. What do you want me to say about that? MTK? No, give me the right ticker. K-View, that's the spin-off, right? Off of somebody. Okay, so when it's a spin-off, we don't have history. It's straight down. I don't know what to tell you. You should treat it like it's falling in lower lows and lower highs until it sets the bottom. Do your homework. The P&L looks good, but the problem is Wall Street doesn't know what it is. So even though you might know, don't treat it as such. Now, you do have a tradable bottom, which is this guy right there. So you can trade it long against 2250, which means if it loses 2250, you exit because you don't know how low it goes. Maybe it goes a penny, maybe it goes $1. You have no idea. So I could go long against that. The P&L looks solid. So you can definitely trade that thing. Natural gas, yes. Is this Bill? No, it's not. It's Jose. Hey. Support at 660. Trustworthy. Looks solid. But this is a pretty tricky ticker, so you know how to handle it. I know you, and you know how to handle it. So yeah, it is a base. You could get support for another rally, but you also have a lot of sellers at 7.6. So definitely trade the range for now. Assume it's going to ping pong inside of a tight range. SYM, didn't we do this already? No, we have not. Okay, symbolic. What the heck? No. Base, looks like every time in the last few months it hits this level, it bounces hard. Now it's going to find sellers at 49, 44 arguably. So if you're trading from here to here, okay. I don't know if I would trust it longer term. Looks like a base. There's a weak spot in the volume below. So if not here, definitely into this long wick. So if I was trading this, I would put an alert here and wake me up. Look, there was a battle for it here, and this covered that gap. But still, there's a gap in the volume, so I think they go there one more time. So don't go all in, even though it looks like a good base short term. I think they have a trip to 32, 33 at some point. WBA. Woof. So is it falling in sympathy to CVS or something? Yeah, that's not pretty. The fact that they lost this area tells me they could go to 27. So they're doing lower lows and lower highs like the market has been doing, only on a longer time frame. So if you do get a rally, treat it like it's going to fade. So any strength into 29 and 29.50, I would use the exit, not start. That's what I would do. That's the trading comment. Okay, so that's a good collection of stocks. Unusual collection, but it's pretty good. I'm going to touch on CSCO because they did report, and forgot what I said about it. I said I wouldn't hold calls. Even though it's up 2%, I don't think call holders are going to make money, especially if they chose this week. The implied volatility was 3 times as much as normal. So you buy a call, and then the stock opens up 2%, and you're not making money, and you're wondering why not. Because the implied volatility, the premium you paid for the calls and the puts the day before, regardless of the price action, is going to get whacked 30%, maybe 40%, just from the bell ringing. So even if you bought calls, a 2% is not a big enough rally in order for you to make money. So nothing unusual with CSCO. This company is a dinosaur. It survived the dot-com bubble, and it's making higher highs and higher lows. In fact, the candle from the earnings is a higher high and a higher low. So there's an ascending channel. You should respect it. And it's doing this inside of a tough market that's doing the opposite, lower lows and lower highs. So respect the fundamentals. That is a bulletproof P&L right there. And if I read the headline correctly, they grew sales double digits and improved profitability. So there's nothing bad with this company. Doing well in a bad market. Don't short it. If it dips into 53 or 52.5, anywhere inside this wick, it's a trading opportunity. What tool are you using for your charts and P&L analysis? This here is called TradingView. It's a charting software that has financials inside of it too, to a higher degree if you want. So it's pretty good. It's not free, but it's pretty good. All right. I also want to touch on Walmart. I don't think I did. Largest employer on the planet. I did not look at their numbers. I'm interested in seeing, if you guys know, let me know. What did they do in regards their comp sales year over year? Are people spending a lot less or more or the same? I'm going to, after we leave here, I'm going to hunt that headline. I don't think the headline here is good. They rarely tell me this stuff. No. So I'll go and hunt down the headline. I'm interested in the actual metrics of sales growth year over year. That's what I want, because they are basically the consumer spending report for the US at least, and it's, if not a big portions of the world. They're huge. So they give us, it's better than looking at the GDP number, for example, to me, to gauge consumer spending. I trust them more than the government's numbers because they're inaccurate. These guys they have to be accurate. Otherwise they'll be in trouble, right? They can't mess around with that stuff. Okay, so I highly encourage you to discuss things in the comment section, and definitely give us a like if you like what we're doing. We're gonna do this 2 times a week again, like we had been for a while, and then we stopped. It's helpful, especially during these tough times. I say tough, the sign on the video said the bears are in deep. They still are. Okay, I should have updated it, so my bad on that one. But what we don't consider is time frames. So let me tell you, if I go to a daily chart, this is a problem for the bears. Higher highs and higher lows. And that started last October. It's almost going on a year, and what can happen is another bounce, and it could fade, and we could drop to this baseline, and it's going to feel very painful. It's probably going to happen. So don't trust rallies unless they take out this area. Then they might take this out before they come back to here. But what I'm saying is, if you draw a channel here, you will get dips that are being bought. This probably was the biggest one in March, and that had a financial crisis with it. So I still think the bears are in trouble without headlines. Let's say they shut down the news for 2 weeks or 3 weeks. No news, no headlines, nothing but the P&Ls that are coming out right now. Would anybody panic out of their stocks? No news of Fitch downgrades, Michael Burry putting puts in, nothing. Shut down all the news. What would happen? There are no alarms. They need a new set of alarms. They need to say there's, God forbid, a new pandemic or an act of terrorism or something structurally wrong with this or that, or a financial crisis of sorts that comes out of nowhere. to change the facts in the P&Ls, not what people feel. So this is a correction of 9%, and it was a financial crisis. This is a correction roughly of 5% with no crisis. We have nothing going on right now. It's just a problem in confidence, because the news keeps chipping. There's nothing going on in the news related to badness in the stock market, so they start making up stuff. They start telling us about Michael Burry's bearish bet, for example, and Fitch decides to downgrade. How about you tell us how good Fitch has been at rating before? Give me your scorecard, Fitch, from 2006 on. I say that because they rated everything AAA and quadruple A to the minute we had the financial crisis, and then after the fact they downgraded everything. Well, you told me this stuff was AAA one day, and then it went to 0 the next day, and it was garbage, and now we listen to you still. So what I'm saying is the news is organized, choreographed. So we don't have anything bad, so they start coming up with 1,000 cuts to bleed us down, which is fine. It's price action that needs to happen. But over the long term, this is a daily chart of stock ABC. Is this a bullish or bearish chart? So the bears are in trouble for almost a year, going on to a year. So that's I should have changed it because it reads weird. But if you say bullish things when things are bullish, that's the obvious things. If you say bullish things when things don't look so bullish, then you may have something on your hands. Anyway, we're looking for turnaround points. For now, rallies are to be sold until we clear 45.20-ish. And expect a dip into the 4300s. That would be normal. And into the 42s, low 42s, I would be very involved in it. I would take longs with hedges because it would be a significant level from a trading perspective. I don't know anything about the fundamental changes. Once we get something that's interesting, then I'll take it. Head and shoulders in the making. They could be drawing the right shoulder. It's 210 points. 210 points is 4,200-ish. That's where I get my number. All right, what time is it? It's 6:07. We have time for more tickers. If you don't have any, I have a list I can go through, so hit me with more tickers. Meanwhile, let me jump into my list. I'll tell you what popped onto my screen this week. CVS this morning, but you need to do some homework. Okay, CVS apparently has, I say headlines don't matter. 99% of headlines don't matter. It's to say most headlines don't matter. This headline could matter because it actually changes their sales. So they had some bad news. Somebody dropped them. Blue Cross dropped them. So Amazon might be popping because it picks up the pharmacy business. Yes, Amazon is a pharmacy too. Remember they bought that pillbox thing? So it could be significant to their sales line. And it also, technically, CVS is in trouble now from this headline. So, yes, so they do have a bounce here, but if you lose that bounce, so it's definitely a tradable thing. You can just trade the bounce, so go long with an immediate stop as a trade without doing homework, or you can invest in it if you do homework. If you do homework and you figure out there's only 5% of sales, not a big deal. Okay, so CVS is an opportunity to trade. UPS also popped onto my screen, falling into prior support zone. Good company. Also Amazon kicking its ass. Weird, huh? Imagine that. Somebody's asking about Netflix. Let's go there. Okay. I shared a trade for Netflix. It played out. I did a credit put spread, and then Netflix rallied, and then I sold the call spread somewhere here, up there, so on this rally. So I have an iron condor that dies in, 5 days. It's not worth 20 cents. It should be closed. This was a circle from here, and it served as a base here. So yesterday, I moved it over to here. I totally thought I turned this arrow around. 100% I turned this arrow around yesterday. Oh, up here. Okay, so yeah, we're going from one circle to another, and these levels have been in contention for weeks, months. So support below, resistance above for Netflix. I would sell a put spread. I don't know if I would buy calls. If I buy calls in Netflix, I would stop out immediately. Like I would put a tight stop, like 15-20% loss or something. Maybe a call spread, call diagonal, call calendar might work best. No earnings for 60 days, so you don't have an artificial catalyst. Hasn't triggered yet, but there. Okay, let me know what you do with it. I'll be interested. Let's see, CrowdStrike and Palantir. Both companies we have traded in the past on the long side. So CrowdStrike, we traded it 2 or 3 times off of its dip from the last earnings. The reaction was super negative. We went long immediately, made money immediately, went long on this dip. I don't remember taking new longs. Oh, earnings in 13 days, so I'm not taking any longs. Has super strong support below and super strong resistance above. So if there were no earnings, I would sell an iron condor to try to make money off of that. Good P&L, good report, growth, improvement of profitability. It's all about disappointment. So if it dips on earnings, I'm all over it. In fact, I'm going to put an alert down here for myself for whatever reason. If it falls before the earnings, I would definitely get engaged with it. Okay? I don't have any reason to hold calls. Technically, above 153, it gets to 160. If it has time to do that before the 13 days go up. So some people like to take longs in a stock going into its earning. And if it runs up into the earnings date, you exit without having to live through the problem with the earnings. Palantir, I re-engaged long. I sold $12 puts. That's because I owned it under 10. I rode the rally up. I got out early. I made good money, but I got out too early. So I like the fundamentals, but I left room for error. I sold puts at 12. If they give them to me, I'll take them. If not, I made money without it doing anything. So technically 16, 15, 9, 16, beating that could be a catalyst back to 17, 16.8. So it's a trade. As an investment, I would hold it for a long term. If I'm trading in and out, I would sell puts to buy long dated calls. But you have a catalyst there. If it loses this recent support zone, it could drop into the mid 14s and low 14s. I would buy shares for the long term. So it's a rest position zone. If it loses the support, it might drop to here, which would be an even better entry point. I mean, it's an exciting field and they're doing well. Meta, not a lot of people are asking me about Meta these days. That's pretty strange. All right, incredible ascending channel. It might be breaking, okay? But every dip has been bought. It's kind of like GE stock going to the moon. But I drew this. I think this should happen, if not more. I wouldn't touch it until it gets to 240, maybe even 230 from an investment perspective. Meanwhile, it is tradable, but this is pretty weak spot. And literally, it's doing stuff nobody's done before. It's trying to create the metaverse. They got so committed to it that they're ballsy to change the company name. They changed their company name to bet on something that they have to build from scratch. When you have 3 billion users, that's gutsy. That's gutsy. Tim Cook would never do that. That's why he's inherited a company and he's just doing exactly what it's been doing for a decade. Okay, so technically good support between 288 and 280 short term. That's the best thing. And a lot of resistance at 312. Beto, I'm long Beto via shares. I have not closed them. So yesterday I made the comment that a lot of frothy crypto tickers, not Beto, like Zilliqa, for example, were starting to sell off. Usually if I see strength in crypto, crappy crypto tickers, I say the VIX spike is not that scary. But when both are happening, VIX is spiking and the crypto crap is falling, then maybe we have a little crisis of confidence on our hands. Falling into support. If I'm looking to buy Beto for the long term, I would just accumulate some on big dips. This is an ascending channel. I'll zoom out to show you. Higher lows and higher highs with large swings. So our entry point is under $10. My entry point is under $9 because it has paid us dividend as well. So this is the ascending channel. So dip, bought. I would need it to go above 17.7, and if it does, I think it gets to 21 from what starting point. There's a weak spot in the chart at 13.4. So I'm not adding, I'm holding my shares. A lot of people in the room are selling puts to own shares, but that's not the same. You don't participate in the dividend. So, but that's a viable way of getting along. I covered the SPY earlier, but I will do it a little bit later. I will close with the SPY. BX, I haven't traded BX for us in a while. We did trade it successfully quite a few times. I would not be long here. I said I would short BX up there. I probably said I had a box that says shortable zone. So it wasn't a perfect short, but if you shorted it in that zone, you're making money. Last time we traded it, it was inside this area, and I think it goes to 93, to be honest, in a series of lower lows and lower highs. I don't remember why it spiked like this. No earnings for 60-something days. So if I'm looking to get long, I need it inside this. I need it to cover this weakness in the volume profile. Okay, I see a lot of names I recognize. I don't want to go through and name everyone. I know you. I've met some of you in person, which is totally cool. If you're new, if you don't belong to our group, you should consider joining us. So reach out however way you can. The comment section is fine. Social media, whichever way you want to hit us up. Simplestocks.net, you can go there and hit us up too. Shortable now? No. That's what you heard, Ash? No. Shortable on its way up inside this zone. I wouldn't short it now. I would short rallies. If it rallies into 100, I would short it. I don't short stocks outright, so let me put a disclaimer. I wouldn't short the stock outright. I would short it by putting some money into puts, like buying puts and putting a stop to it, put spread, or selling a call spread. I wouldn't sell a naked call, that's shorting outright. Doing a combination of the two, selling a call spread and buying a put spread or a put, any combination of those. So that's what I mean by shorting. Okay. For example, here I shorted a put spread, which is going long the stock. I shorted a call spread, which also worked because it expired before the spike, which is going short a stock. And this was an iron condor that worked. Before that, we had a lot of bullish bets on it. Actually, we also bought calls on it at some point. Okay, what else do you got? We have a few minutes, 7 minutes before I start closing. Give me tickers. I'll show you mine. Oh, one thing that people are not talking about. I bet you they're talking about rising rates, right? One day they tell us it's a bad thing, and the next day they fall, and the stock market falls, and they don't say anything about it. Rising rates is not a bad thing, okay? Maybe it's bad, maybe it isn't. There's no correlation. There's no correlation with that. So if you listen to the news, now you're worried about rising rates. Rates have been rising for a long time. Now it's a problem. How about focusing on something they used to focus on? They freaked us out about the yield curve. It's inverting. Well, this rising rates happens to be rising long-term rates faster than short-term rates. So the yield curve, this is the yield curve that CNBC tracks. It's uninverting itself. It's still inverted, but it's getting better. So at some point, CNBC is going to start talking about something they used to freak us out about. So the idea is to not focus on the news, on the talking points, but learn what they're talking about and educate yourself. Rising rates in this case is fixing the yield curve problem. Okay. All right, who's here for the first time? Who doesn't know us? Those of you who know us already are putting likes. I'm pretty sure. Let me check here. How many likes do we have? 37. Slackers. Are we not doing a good job? Let me know. If you don't put a like, I expect you to tell me why not. What are you missing? If you're here and you haven't hit a like, that's because you forgot. So I kindly ask you to tell us how we're doing. Put a like if you like it. Is there a dislike button? No. Or tell me what would you like to see in order for me to earn a like. How about that? But whatever you do, I need you to subscribe to the YouTube channel and put the bell on, because we're going to do these live things. And if I forget to send the note out, then you'll be notified when we go live. Okay? Great. UAA. Under Armour? You know what? I wanted to go long Under Armour a couple months ago. It's a good base as an investment. I don't know how well they're doing in the world of sports, but the stock is in a good base. London, I don't need you to tell me that. I appreciate it though. Higher lows, you have a catalyst at 810 and a bigger catalyst at 850. So if you're holding it for that breakout, not a bad. Make sure, okay, no earnings, so nothing is going to disrupt you. Buffett bought home construction stocks with rising rates. What is he thinking? I don't know. I'm not smart enough. I already did Alcoa. I already did Amazon. No, I did not. I mentioned Amazon. I didn't do it. So Amazon might be popping today on the problem that CVS showed. Okay, CVS is having a conniption today. So Amazon, you can ignore this. That was before the earnings, when we were talking regular price action. I forgot what this is. I think this is an iron condor. Is this Luis's iron condor? Somebody did an iron condor in the live room, and those were the edges. So it's working fine. Amazon has good support below. It's in an ascending channel, higher highs and higher lows. Look, dip from here to here was bought. Dip from here to here will get bought, if not here, into 133. I believe I do have an iron condor on Amazon. Maybe that's my iron condor. I like a credit put spread, and I do like a credit call spread too. Great company so far, proving itself solid performer over the long term. Amazon. What else? Did I miss one? I think I got them. I know you mentioned on the SPY. The SPY I will close with, not right now. I'll talk about the indices with the last 4 or 5 minutes. American Airlines. Tesla I already talked. Yell and American Airlines. AAPL. The airlines are my favorite group. No, they're not. They are not my favorite group. Okay, check this out. This is an old note. The note here says, okay, breakout. Look what they did. That was insane. But also here it says resistance. So now it's support. So it's falling to fill this idiotic rally from here. This is a much better starting point than somebody chasing it up there. So if you're a fan of the stock, you're about 50% of the way down. It's not an absolute hard floor. I can see it going to 15 or 15.8. Good starting point for a trade. In fact, I'm going to add it to my trading. I don't trade these, but I need trade ideas for a lot of write-ups. I share a lot of trades, so a group might be interested in that. As an airline, it's doing okay. So I travel once a month now, and I've used American, United, El Cheapos, which are not really El Cheapos anymore. American is doing a decent job. Nothing outrageously bad with it. So it's an interesting stock. I don't remember the options prices. If it ever comes down to 14, it makes an unbelievable entry from a trading perspective. Yell. What is Yell? Yell Q? Did they just change their ticker to Yell Q? Because it was Yell this week. Did they just change it? This is a long with stops as a trade. You can expect an effort to get to 2.2. This is doable in 2 spurts. With stops. I don't know what happens if it goes below that candle. ACHR. Somebody in the live room yesterday mentioned that they were long. Higher lows, I think they have a huge problem at 6.8, whatever that was. The earnings reaction is a big problem. But as long as they're making higher lows, they can chip away at those problems. If I'm long, I stay long. Make sure it's not a call that's going to die. Sell puts to buy a long-dated call. That would be another way of doing it. Unity we can do. Palantir I already did. Airbnb we can do. Ray, are you in here? If you're in here, can you do me a huge favor? Can you scroll through and put the tickers we just covered? I might not have time to do it in a list, chronologically ordered. I did that yesterday. I just scrolled through 2 days ago. All right, so this was what? Unity. All right, so Unity went to the moon based on a headline that it was doing some work with Apple, I think. And then there was some chatter about a different company. So there's a lot of headlines that took it to the moon. Now it's back to reality. So it looks good, but I think I would want to start closer to 33. So if I'm invested in Unity up here, I am not adding down here. If I bought it on the way up here, you should come join the group. Okay, because I would have told you it's TH. It was too high to chase and too hot to short. I would have waited. I think it has a date with 33. But it's on my list, I think. I would sell puts to own shares. My list is growing if it's not on my list. It is not. What? I don't know why not. Maybe it was earnings. I don't know. It's one of the stocks I would sell puts to own shares down here. But you need to study the P&Ls. It's not that great. Oh, that's why. Because it just spends too much money. Maybe it's getting better. I don't know. Study the fundamentals before you do anything. Technically, I think it has a date with 33. I'll do the Qs in the closing. Airbnb. That's the one that went nuts and then gave up. Okay, I would go long Airbnb by selling puts. You notice I'm saying selling puts. I don't trust the market. I just started the session. I'm going to end the session by telling you, oh, we're out of time. I'm ending the session by telling you that we are not trusting rallies. So if I don't trust rallies in the S&P, I can't expect rallies to hold in anything else. Okay, so fundamentally, technically, this is falling into support. Fundamentally, it's doing fine. And so I want to buy this dip, but very expecting the market to stumble. So if that's the case, then I should respect the bears all over the place. So I'm going to close with reiterating the note from this morning, which is don't trust rallies. This is the SPX 2 hours. 2-hour chart, SPX, everybody knows it. Until it comes out above 45.90 and 44.90 and 45.10ish, I wouldn't trust these rallies. I need a rally big enough of like 2%, 2.2% to take out this candle at least and get in that candle area. Of course, this is a prior fail, but at least it would have gotten built up enough cushion, because this rally could curl up and lose wherever we jump from, and we end up down in the 42s, 43s, 43 to 42.50 pretty quickly. So that's what I'm avoiding. Okay, higher lows, higher highs is still working, but I should respect the bears enough that rallies, 1% rally is nothing, 1.5 is nothing, 2.2 or higher, okay, I'm starting to listen. Okay, so everything I said about every company in here has to work inside that. And also look at the IWM. They may be bottoming first because they haven't even broken out yet. All right, and they do have a support zone closer than the S&P. So rallies are being sold in these small caps. But if they don't make a lower low and they make a higher high, sign one that the market has bottomed already. All right, I'll leave you with that. Folks, I appreciate you being here. Let me see how many likes. 64. But thanks, I appreciate it. We won't stop. We will do better. We will earn more likes next time. If you haven't hit a like, don't hit it twice. You'll unlike it. Do that, but subscribe to the channel and hit beep CVS. What just happened? Okay, so do that and put the bell so you can get notified. All right, I'm going to rudely hang up on us here. End the stream in 1, 2, 3. Bye.